Thank you for attending the reverse mortgage seminar by Green Street Mortgage Services. We've got a lot of material and I'm going to try to make it in under 20 minutes for you. Okay, the second slide is our legalese and disclaimer. The information contained herein was provided from a variety of industry and lender resources and is provided on a general use basis. A reverse mortgage is not necessarily appropriate for all situations. Individuals considering a reverse mortgage should take time to educate themselves and solicit third-party assistance in matters related to financial transactions. Such third parties may include, but are not limited to, licensed mortgage providers, attorneys, financial planners, tax professionals, and housing counselors. Now, the purpose of this presentation is to provide basic knowledge to industry professionals like yourselves. The goal is to increase the awareness of this product as well as figure out the uses which could satisfy growing concerns for homeowners ages 62 and older. Over 8,000 individuals reach the age of 62 every single day. And a little bit about the demographics. The greatest generation is shrinking. The baby boomer generation, or the silver tsunami, is reaching the senior age of 62 in significant numbers. And we must consider the sandwich generation, which is beginning to provide for both seniors in their own homes as well as children or grown children in their homes as well. They're starting to become sandwiched from a financial perspective. So middle-aged adults or sandwich generation, ages 40 through 59, those individuals that have a parent and are also raising a minor child or supporting a grown child, is increasing from 2005 to 2012 by 2%. This is the more important statistic. That sandwich generation, which is providing financial support for parents ages 65 and older and a child of any age in the last year, has grown by 3%, which is a significant number when you consider the individuals. Now, the growing concerns of these seniors are a desire to age in place or remain in their community, in their home, near their friends. Also, there is an increase in life expectancy. Their retirement and savings plans don't seem to measure up when considering their life expectancy. Some are in search of in-home long-term care support. Their concern is being institutionalized in a sterile environment outside of their age or their aging in place concern or their general locale. Changes in Medicaid are prompting concern as well as family and inheritance issues. Now, interesting starting point with respect to search for knowledge regarding the reverse mortgage. Martilla Strategies did a survey on behalf of NORMLA, or the National Reverse Mortgage Lenders Association, about the affordability of monthly expenses and fears by seniors. Interesting to note that the majority of the sandwich generation preferred that their aging parents use their income and assets to cover living expenses and to enjoy the best possible lifestyle, as opposed to leaving an inheritance to that sandwich generation. Now, to give you an idea of the magnitude of this segment, first of all, 98% of seniors are not using the reverse mortgage, and the equity tied up by those seniors is over $3 trillion in retained equity. Now, what is a reverse mortgage? It's a first lien mortgage for borrowers that are age 62 and older, living in their primary residence or on their primary residence. There is no mortgage payment, no income qualification at this time, no credit qualifications, limited restrictions on how the funds are used, and non-recourse. The product is non-recourse, meaning no debt is left to the heirs or to the estate. Now, when deciding whether or not a reverse mortgage makes sense for the aging senior, typical sources to consult are family members, friends, the media, social clubs and organizations such as AARP, religious groups, and personal financial service providers such as accountants, financial planners, bankers, insurance agents, etc. Two most frequently misunderstood urban legends. One, reverse mortgages are expensive. This is true from the standpoint of mortgage insurance, irrespective of the value of the home compared to the amount of the loan. Many of you know that mortgage insurance is not required on a loan that is 80% of the value of the home. The reverse mortgage has mortgage insurance whether it's 2% the value of the home, 30% the value of the home, 100% the value of the home. So with respect to that, reverse mortgages could be deemed to be expensive, but in considering the cost to the senior of continually making that payment over the duration of the term on a forward mortgage, as far as a cash flow perspective is concerned, reverse mortgages could be deemed to be less expensive than a forward mortgage. The other urban legend is that the bank owns the home. The fact of the matter is, if you have a first lien forward mortgage on your home, the traditional mortgage, the bank does own or have claim to your home. That is the same with the reverse mortgage. The bank does have a note against the home. It does have claim on the home, just like the forward mortgage. Okay. Eligibility: minimum 62 years of age. Owner occupied only. Any property is eligible so long as it fits the FHA approved property types, such as single family dwellings, townhomes, condominiums. No minimum credit score. No income or ratios to qualify. Counseling is required. These are one of those protections for the consumer. Counseling is required prior to application, prior to charging any money to the borrower. Counseling is required. Ownership can be fee simple. The ownership of the property or remaining ownership can be placed within a trust or within life estates. Power of attorneys are okay in certain situations. Conservatorships and guardianships are permitted with underwriter approval. Lien position: the HECM or reverse mortgage, home equity conversion mortgage, must take out any forward debt, any tax liens, any claims on the property, and must take a first lien position. Now, loan proceeds can be used for the abatement of the mortgage or any other lien, meaning in essence it cancels out the forward mortgage payment on a monthly basis. Loans proceeds can be used to improve the quality of life in estate planning strategies, for home maintenance and payment of taxes, medical and healthcare funding, basically anything they choose. A couple other ideas: home purchase, we'll get into that in the future, family assistance, future needs or the rainy day fund, and home improvement, in fact. Now, 5 ways that the borrower is protected. First and foremost is the counseling and financial analysis that we've talked about. Competency assessments, individuals that are suffering from mental deficiencies as they age are protected by the underwriter and requirements there. Right of rescission protects the borrower just like any forward mortgage refinance, in the sense that after the borrower signs, they have up to 3 days to reconsider and cancel the transaction. Advanced disclosures are significant, to the tune of approximately 165 pages, which may be overwhelming, but with the right mortgage planner, mortgage loan officer, these are explained to the consumer and understanding is reached. And there is no prepayment penalty on the mortgage.